Okay, it's Wednesday morning. Markets open in a few hours. And if you're holding silver right now, if you're watching it, if you're trying to decide what the hell to do when the bell rings, you need to understand what happened yesterday and what it means for today's session. Because yesterday's 8.6% rip wasn't just a random bounce. It was mechanical. It was structural. And today's price action is going to tell us whether that was the beginning of a recovery or just a relief rally before another leg down. Stay with me because I'm going to show you exactly what to watch when markets open. The patterns playing out right now, they've happened before. And if you know how to read them, you'll know whether to hold, whether to add, or whether to step aside before the next move hits. Your job this morning is to understand what's actually driving price, not just react to the candles on your screen. If you're watching this before the open, you're already ahead of everyone who's going to panic trade the first 15 minutes without a plan. Before we talk about what to expect today, let me teach you what actually happens after a parabolic collapse and a violent bounce. Most people think yesterday's move was buyers coming back in, confidence returning. Maybe the worst is over, but mechanically, it's usually short covering and dip buyers testing the waters. Think of it like this. When silver crashed from 122 to 71 in less than a week, everyone who was long, everyone who bought on leverage, they got destroyed. Forced liquidations, margin calls, panic selling. By the time we hit 71 on Monday, most of the weak hands were already out. They'd already sold. So yesterday, when silver ripped back to 86, that wasn't new bullish conviction. That was the aftermath of the massacre. Shorts taking profit, algorithms detecting oversold conditions, bargain hunters stepping in. It's like when a forest fire burns out. The flames die down, smoke clears, and you see what's left standing. Yesterday was the smoke clearing. Today we find out if there's anything left to build on. Understanding that rhythm is how you avoid getting trapped. Thinking yesterday's strength means we're going straight back to 100 plus. Now here's what's actually happening beneath the surface, and this is what you need to watch today. When silver spiked late last month, speculative leverage hit extremes. Retail futures traders, algorithmic CTA funds, everyone piling in with borrowed money thinking this rally was going to 150, maybe higher. That leverage is what caused the crash. A small drop forced big sell orders. Those sell orders triggered margin calls. Margin calls became forced liquidations. Each liquidation pushed price lower, snowballing the decline. By Monday at 71, that cascaded burned through most of the leverage buying power. The weak hands were gone, blown out. Yesterday's bounce was the market exhaling after that purge. Dip buyers stepped in because they saw technical oversold conditions. RSI crushed. Open interest down sharply. Sentiment completely exhausted. That combination sparked the 8.6% move we saw yesterday. But here's the part that should make you nervous about today. The rebound itself isn't proof the bottom's in. It's a reaction to the unwind. It's the rubber band snapping back after being stretched too far. And the late buyers from last month, the ones who bought at 110, 115, 120, they're still trapped. They're still underwater. If silver slips back towards 75 or 80 during today's session, emotion kicks in again. Panic selling meets bottom fishing. Volatility doubles. That's why today is so crucial. Does silver consolidate and hold above 80 when New York opens? That would signal stabilization. It would suggest yesterday wasn't just a dead cat bounce. Or does it crumble back under pressure in the first hour? The chart alone won't tell you. Positioning will, volume will. Always watch who's forced to act, not who's just commenting on social media. Now, let me show you what very few people are talking about this morning. This exact pattern has played out before, and every time it does, the day after the bounce is critical. Go back to April 2011. Silver ran from 35 to 49 in 3 weeks. Parabolic. Then it crashed over 30% before bouncing violently. Sound familiar? The next day, the day after that bounce, silver tried to push higher in the morning, failed by noon, and spent the rest of the week chopping sideways. Traders back then said the rebound is real. We're going back to 50. It wasn't real. The metal frustrated everyone for weeks, then drifted lower for months. Same thing in August 2020. Parabolic surge, brutal correction, fast bounce. The next trading session opened strong, faded by midday, and the following 2 weeks were pure chop. Whenever you see an 8 to 10% rebound immediately after a 40% crash, history whispers the same message. The day after the bounce usually opens with optimism and closes with uncertainty. The storm isn't over. It's just reorganizing. Here's another one. March 2008. Silver crashed from 21 to 17, bounced hard, and the next morning everyone thought, okay, crisis averted. By the close, it had given back half the gains. Within weeks, it was testing new lows. What's the lesson for today? The first bounce after a parabolic collapse rarely holds on day 2. Morning strength often fades, its short covering unwinding, its early dip buyers taking quick profits. The underlying structure, the leverage, the sentiment, that takes time to reset. You can't repair 41% damage in 2 days. So, when the bell rings this morning, watch the first 30 minutes. If silver pushes above 88, 90 on strong volume, maybe yesterday's buyers have conviction. But if it struggles to hold 85, if volume's weak, if it fades back toward 82 by mid-morning, that's your tell. That's the market saying yesterday was relief, not reversal. Now, let me be skeptical for a moment because I want you to hear independent thinking, not just hype, especially before you make decisions today. Some people are already saying, yesterday proved the manipulation's over, the bottom's in, load up before the open. Could that be true? Maybe. Could yesterday's move have been smart money accumulating? Yes. Could this be the start of the next leg higher? Possible. Here's the thing. It doesn't actually matter whether yesterday was genuine buying or just mechanical bounce. What matters is what happens today. The mechanics are what you should focus on. In complex markets, the crowd's own leverage is the biggest force. Structural liquidity gaps exaggerate every move. Besides, betting on narratives instead of price action doesn't help your trading discipline. Focus on what you can control today, your risk size, your entry point, your stop, how well you recognize whether today's open is continuation or exhaustion. That's your edge this morning, not trying to guess whether yesterday was real or fake. There are probably 3 types of people watching this right now, trying to figure out what to do when the bell rings. The first group, your momentum chasers. You missed yesterday's move and you're thinking, I need to get in at the open before it runs away from me. Relax, take a breath. The first hour of trading after a massive bounce is usually a trap. Let the market prove itself. If silver holds gains through lunch, if it builds on yesterday's strength into the close, then maybe you've got something. But buying the gap up at 9:30, that's how you get whipsawed. Wait for structure. Wait for the first pullback. Your patience this morning will save you money by this afternoon. The second group are long-term stackers, physical silver holders. You're not trading today's open, you're just wondering if yesterday changed anything. It didn't. Not yet. Inflation's still here, debt's still climbing. Currency debasement narratives all stay intact. Your challenge today is tuning out the noise. If silver rips higher today, great. If it chops sideways, fine. If it gives back yesterday's gains, annoying but irrelevant to your thesis. If you bought silver at $30 years ago, today's volatility is just noise. If you bought at $115 last month, yeah, this hurts. But if your conviction is long-term, today's price action doesn't change why you're holding. Your job is to ignore the first-hour fireworks and stay focused on the bigger picture. The third group are active traders trying to get smarter. You want to read today's price action correctly. You want to understand whether yesterday was a short covering spike or genuine demand returning. For you, today is a golden opportunity. Watch the open closely. Watch how silver reacts to 85 to 88 if it gets there. Watch the volume profile. Watch whether it fades into the close or builds momentum. Study how the market behaves after a violent reversal. Because every major turning point looks different on the surface, but internally, it rhymes. If you can recognize today's rhythm, you'll know when to step in and when to stay patient. So here's what I want you to answer in the comments after the close today. Did silver hold above 85? Did it build on yesterday's strength or fade? Did volume confirm the move or suggest weak follow-through? Because your observations today are part of building pattern recognition, and that skill is worth more than any single trade. Here's where I stand going into today's open. I'm not a silver cheerleader. I'm not trying to pump anything before the bell. I'm a pattern collector, and I want evidence, not hopium. Right now, I'm watching 3 things during today's session. First, I'm watching whether open interest keeps shrinking or starts to rebuild. If open interest ticks higher today without price making new highs above 90, that's a red flag. It means new leverage is building before the structure's healed. Second, I'm watching the first hour volume compared to yesterday. If today opens on lighter volume, that suggests yesterday's buyers aren't getting reinforcements. If volume's heavier and price holds, that's more encouraging. Third, I'm monitoring how silver behaves around 85. That level's roughly the 50% retracement of the crash from 122 to 71. If it stalls there, if it struggles, that tells us yesterday's move was technical, not fundamental. Yesterday's surge wasn't random. It was structural, technical, mechanical, all three in motion. The fundamentals didn't suddenly change. Psychology did. Positioning did. The forced sellers finished selling. But that doesn't mean today's going to be smooth sailing. If history rhymes, and it usually does, today could open strong and fade by lunch. Or it could consolidate sideways and frustrate everyone. Or it could surprise us and push toward 90 if short covering accelerates. I don't know which path we'll see in a few hours, nobody does, but I know the playbook, and I know watching those three signals during today's session will tell me more than any pre-market headline. I'm not a financial advisor. This is not financial advice. Do your own research before you do anything at the open. Seriously. Don't take my word for it. Don't take anyone's word for it. Watch the market. Let it show you what it wants to do. Build your own conviction based on what actually happens, not what you hope will happen. If you made it this far before the open, you're preparing instead of reacting. That puts you ahead of 90% of traders who'll panic trade the first candle. Most people chase moves without a plan. You're here building one. That discipline will serve you today and every volatile day after. So stay sharp this morning. Watch the open with clear eyes. See through the noise. Respect what the market's actually doing, not what the headlines say it should do. Because recognizing that difference in the first 30 minutes, that's your real edge today. If this helped you prepare for the session, share it with someone who needs a plan before the bell. Subscribe if you want more real-time analysis like this. And I'll see you after the close with what actually happened. Stay sharp out there.